Everyone told you to just invest in index funds, hold for 30 years, and you'll be rich. But here's the truth. When everyone is doing the same thing, there's no edge, no advantage, and no freedom. You're not investing, you're just funding a system that was never built for you. We've all heard it by now. Just invest in the S&P 500, dollar cost average, hold long term, and you'll be rich. But here's the uncomfortable truth that no one wants to say out loud. That advice doesn't work like it used to. In a system built on exploitation, asymmetry, and scarcity of opportunity, the idea that everyone can get rich the same way is just not how capitalism functions. So today we're asking, what happens when everyone is an investor and no one has an edge anymore? In this video, we're going to unpack the myth of retail investing. Now, let's be clear. The logic of investing makes sense. Put your money into the market, let compound interest do its thing, retire early, live off the gains. That was the dream, and for a while it worked. Boomers who bought into the market in the 80s and 90s, early adopters of tech stocks, and even millennials who got in post 2008. You didn't have to beat the market, you just had to be in it. But now, everyone knows the rules. Everyone's index investing and everyone's buying ETFs. There's no information gap, no early edge, no room left for extraordinary outcomes, just average ones. And here's what most people don't understand. The market doesn't reward participation, it rewards advantage. Big institutions, they have inside access, algorithmic trading, political influence, and enough capital to move entire markets. Retail investors, they have an app. If you're investing the same way as millions of others in the same index funds on the same schedule, you're not actually investing. You're donating capital to a system that's already optimized to extract from you. Worse enough, the more people that buy passive ETFs, the more price becomes divorced from fundamentals. You're no longer investing in business performance, you're just feeding a machine. Now, capitalism at its core is about edge. Supply and demand, innovation, and arbitrage. Financial freedom was never meant to be universal. It was meant to be scarce, reserved for those who could control supply, manipulate demand, access insider information, or produce outcomes far above average. Now ask yourself, if everyone is investing, who's left to be exploited? Because if we're all chasing the same 7% annual return, then no one's really winning. We're just moving sideways, hoping inflation doesn't eat us alive. And that's the truth. Investing has gone from a strategy to a narrative. A story that makes people feel empowered, while they're still working 40 hours a week, locked out of home ownership and praying that the stock market saves them in 30 years' time. So what actually works? Historically, true wealth has come from owning businesses, creating monopolies, being early in emerging markets or tech, leveraging asymmetric information, exploiting labour, supply chains, or access to capital. In short, by operating outside the average. Real financial freedom doesn't come from buying what everyone else is buying, it comes from being in the room where value is created. Retail investing doesn't give you that room. It gives you a ticket to observe from the outside, and if you're lucky, you'll beat inflation by a couple percent. Now, retail investing isn't useless. It's just overhyped. It's not a strategy for freedom, it's a strategy for survival. It might keep your wealth from eroding, but it won't create generational wealth, not unless you do something extraordinary. In a world where everyone knows the same playbook, you're going to need more than buy and hold. You're going to need to break the rules, take risks, or build something of your own. Because the truth is, you don't get free by following the same path as everyone else. You get free by creating something no one else can copy.